For over 2 centuries, one story has defined the ultimate financial power play. The tale is seductive. Nathan Rothschild, via a carrier pigeon, learns of Napoleon's defeat at Waterloo a full day early. He then deceives the London Stock Exchange, buying the entire British bond market for pennies and securing a legendary fortune. But what if this iconic Rothschild signal is almost entirely false? Tonight, we dissect the myth versus the monumental truth. We will explore how fortunes are truly forged in the chaos of war through information networks, psychological manipulation, and systemic power, not mythical birds. This is the Blood Money Files. The Battle of Waterloo wasn't just a clash of empires. It was a financial fault line. On June 18, 1815, the fate of European debt, currency, and sovereign power hung in the balance. The popular narrative gives us Nathan Rothschild, a financier with a private intelligence network, awaiting the pivotal Rothschild signal. The arrival of the dove with the coded message is the trigger. This story is a foundational parable of capitalism, teaching that speed of information equals absolute power. It frames the Rothschilds as shadow sovereigns who could outmaneuver nations. The emotional resonance is powerful. It speaks to our fear of hidden forces and our awe of genius-level strategy. But this mythos serves a purpose beyond historical anecdote. It obscures a more complex reality of 19th-century finance. To understand why, we must first map the actual battlefield, the turbulent London Stock Exchange of 1815. This was a place rife with rumor, where government consols, consolidated annuities, were the primary instrument of state debt. Their price was a direct barometer of national survival. The legend simplifies this volatile arena into a single cunning move, erasing the intricate systems of capital, credit, and communication that truly shaped events. Our investigation begins not by accepting the fable, but by interrogating its timeline and its actors' true capabilities. Let's apply chronological logic to the legend. Historical meteorology reports confirm a severe North Sea storm on June 18th and 19th. Making cross-channel pigeon flight virtually impossible. The official British government dispatches, carried by human couriers, arrived in London late on June 21st. So what was the real Rothschild signal? Nathan Rothschild's true advantage was a sophisticated, reliable courier system using fast boats and dedicated riders, a network far more expensive and organized than a single bird. Evidence suggests his agents were near the battlefield and likely had initial, fragmented reports by the evening of June 19th. The critical insight is this: he didn't have confirmed news a day early. He had preliminary indicators hours ahead of official confirmation. This information asymmetry, while significant, was a matter of hours, not days. It was enough to formulate a strategy, not to execute the cartoonish market cornering of legend. This timeline dismantles the fairy tale and replaces it with a scenario of calculated risk. Nathan wasn't operating on divine certainty, but on high-probability intelligence filtered through a superior communication pipeline. His next move, therefore, wasn't a simple buy order. It was a piece of psychological and financial theater designed to manipulate a market starving for certainty. The real story shifts from a passive receipt of secrets to an active manufacturing of market conditions. Imagine the floor of the London Exchange on the morning of June 20th. The air is thick with panic. Rumors of victory and catastrophic defeat swirl. Nathan Rothschild, a figure of immense known capital and influence, takes his position by the Rothschild pillar. His every move is watched. According to credible contemporary accounts, his performance began. He did not start buying. He began quietly, grimly, selling his substantial holdings of British government consols. This is the masterstroke. To the anxious traders watching, this was the ultimate Rothschild signal. If the man with the best intelligence was selling, the news from Waterloo must be disastrous. A wave of panic selling ensued, driven by herd mentality, crashing the price of consols to rock-bottom levels. Only then, once the panic had fully taken hold and prices had collapsed, did Rothschild's agents begin their true work, buying up the massively devalued bonds in enormous volume. The profit was not in having early news, but in using his market influence and reputation to engineer a temporary false reality, a controlled crash, from which he could profit on the inevitable. Explosive rebound when the true news of victory arrived. This two-act play, sell to induce panic, then by the despair, demonstrates a profound understanding of market psychology that transcended mere information advantage. While the Waterloo bond market manipulation was a legendary trade, it was a spectacular symptom, not the cause, of Rothschild power. The family fortune was built on a far more durable engine: international arbitrage and bullion trading. The five Rothschild brothers, stationed in London, Paris, Frankfurt, Vienna, and Naples, created the world's first multinational private bank. They mastered the movement of gold and silver across warring borders, financing both sides of conflicts and providing governments with liquidity when traditional channels froze. The profits from Waterloo, however immense, were reinvested into this system, expanding their capital reserves and political connections. The true Rothschild signal was not a pigeon's message, but the constant flow of diplomatic, political, and commodity information between their offices, allowing them to price risk and opportunity better than any competitor. This systemic, network power made them indispensable to the 19th century financial order, a status far more valuable than any single windfall. The Waterloo trade was a brilliant leveraging of their existing network, not the genesis of it. It provided a massive infusion of capital that accelerated their dominance, but the machinery of their empire was already humming, built on trust, logistics, and geopolitical insight. So why did the pigeon story take such firm root? The myth was propagated primarily by anti-Semitic pamphleteers in the late 19th century. It served a clear narrative that a shadowy, alien network used deceit and supernatural speed to manipulate Christian empires for their own gain. It transformed complex financial acumen into a sinister, almost magical trick. This conspiracy theory was politically useful, simplifying the anxieties of industrialization and capital concentration into an easily hated villain. Ironically, the family itself may have tolerated the myth's endurance, as the aura of omniscience it conferred was a powerful deterrent against rivals and a magnet for clients. The conflation of the Waterloo fortune with the origin of their wealth obscures the more mundane, grinding, and brilliant work of building a trusted, pan-European banking network. By examining the myth's origins, we see how history is often rewritten to serve ideological purposes, turning sophisticated economic history into moral fables about hidden control. The pigeon narrative persists because it is simple, dramatic, and feeds into enduring suspicions about the sources of great wealth and power. It personalizes systemic forces into a single man and a single bird, a story far easier to tell than the complex truth of ledgers, treaties, and telegraph cables. Rothschild's strategy was a primitive, perfect application of principles we now call behavioral finance. He understood market psychology instinctively. The London Exchange was a classic example of an information cascade. Traders, lacking definitive news, took their cues from the most seemingly informed participant. By selling, Rothschild triggered an availability heuristic, the most readily available data point. His actions overwhelmed rational assessment of prior probabilities, Britain's military strength. The resulting panic selling and liquidity crisis created a massive mispricing. This wasn't just about capital, it was about understanding that in a vacuum of truth, perception is the only reality that matters. His play exploited the bid-ask spread on a catastrophic scale, buying where others were forced to sell in desperation. This chapter isn't just history. It's a blueprint of how markets, driven by human emotion, can be gamed by those who control the narrative. The same principles of fear, herd behavior, and asymmetric information drive modern market crashes and speculative bubbles. Rothschild's genius lay not in breaking rules, but in understanding the unspoken rules of crowd psychology and leveraging his reputation to become the catalyst for a self-fulfilling prophecy of financial doom, which he alone was prepared to reverse for profit. The immediate profit was one thing, but the long-term strategic victory was another. By supporting British credit at its most precarious moment, the Rothschilds became the de facto managers of the British national debt. The British government bonds, consols, they amassed provided a steady, guaranteed income for decades, a perpetual annuity funding their future ventures. This solidified the London market as the world's financial center and intertwined the Rothschild destiny with that of the British Empire. The capital generated funded railways, canals, and industries across Europe and the Americas. The The Waterloo prophet acted as a colossal seed crystal dropped into the solution of 19th-century finance, accelerating the growth of a globalized capital market. It demonstrated the power of sovereign debt as an investment vehicle and established a model where banking families could become more stable and influential than the kingdoms they served. The trade's legacy was the deepening of financial markets and the proof that liquidity provided in crisis is rewarded with enduring influence. The bonds bought in the panic paid dividends for a century, financing the infrastructure of an industrializing world. The core truth of the legend is the premium on information speed. The Rothschilds' investment in their private courier network was a capital expenditure as crucial as any bank vault. They used fast cutters, relay horses, and coded messages. After Waterloo, the family continued this arms race, being among the first to adopt the telegraph, again compressing the information advantage timeline. This relentless pursuit of a faster data pipeline is the real legacy. It created a positive feedback loop. Better information led to better trades, which generated more capital to invest in even better information systems. This cycle is the engine of modern high-frequency trading and financial news services. The quest begun with fast boats after Waterloo evolved into the satellite and fiber-optic networks of today. The medium changed from horse to wire to light, but the principle remained. In finance, milliseconds are millions, and the entity that sees first acts first. The Rothschilds institutionalized the notion that information infrastructure is a primary competitive weapon in finance, a lesson that defines the digital trading floors of the 21st century. This forces a difficult question. Were the Rothschilds brilliant market makers or the ultimate war profiteers? The line is famously thin. By providing liquidity and facilitating the movement of bullion, they performed an essential function for economies at war. They took monumental risks. If Napoleon had won, their British holdings would have been worthless. Their profit was, in one view, a justified risk premium. However, the deliberate incitement of a panic to depress asset prices crosses into morally gray territory. It highlights the inherent conflict in finance. Actions that stabilize systems in the long term, by providing market depth and capital, can involve exploiting instability and human fear in the short term. This duality defines the Rothschild legacy in the modern financial world. Were they villains of capital concentration or architects of the modern bond market? The answer is often both. A reminder that the machinery of global capital is built on foundations that are as much about opportunistic cunning as they are about economic theory. Their story forces us to confront the uncomfortable reality that the mechanisms which build and stabilize modern economies are frequently born from acts of profound, calculated self-interest during times of collective trauma. Let's move from myth to spreadsheet. While the exact figure is debated, historians estimate the Rothschild profit from the Waterloo maneuvers was likely between £1 million and £3 million in 1815 pounds. Contextualizing this is key. The entire British government's war subsidy to Prussia was £2 million. Nathan's personal share transformed his capital base. More importantly, by 1825, the combined capital of the 5 Rothschild houses was estimated at over £30 million, dwarfing their nearest competitors. This wealth accumulation allowed them to underwrite entire nations. The numerical legacy isn't just in the singular trade, but in the compound growth it unleashed. It provided the risk capital to fund the Industrial Revolution's infrastructure, turning a tactical market victory into generational, structural power. The numbers tell a story of leverage. Leveraging information, leveraging reputation, and ultimately, leveraging a single geopolitical event into a permanent position at the apex of the global financial system. The profit was not an end, but a means to scale their operations to a level where they could influence the destiny of states through debt issuance and large-scale project finance. Imagine the pigeon story was literally accurate. Nathan Rothschild receives confirmed, exclusive news 24 hours early. What would a rational actor do? The obvious move would be to buy aggressively but quietly, spreading orders to avoid moving the market, maximizing profit on the rise. The legend's version, where he brazenly corners the market, would have been irrational, inviting investigation and fury. This counterfactual analysis reveals the internal flaw of the myth. It describes a move of cartoonish villainy, not cold financial logic. The real story is more nuanced and more intelligent. It acknowledges the uncertainty Rothschild faced and the sophisticated two-stage play required to profit from it. Analyzing the counterfactual reinforces that the true history is not a diminishment of Rothschild genius, but an elevation of it, from a simple receiver of secrets to a strategic puppeteer of market sentiment and mass psychology. If he had acted as the myth suggests, he would have been a gambler. By acting as he did, he was a strategist, manufacturing the very market conditions from which he would profit. The truth reveals a deeper, more calculated intelligence. The spirit of the Rothschild signal lives on in Wall Street's high-frequency trading (HFT) firms. Today's pigeons are microwave towers and fiber optic cables laid in straight lines at great expense to shave milliseconds off data transmission between exchanges. The goal is identical: an information asymmetry measured in microseconds to execute trades ahead of the market. The modern panic might be a flash crash triggered by algorithmic feedback loops, reminiscent of the human herd on the exchange floor. The ethical debates are parallel. Are HFT firms providing essential market liquidity or engaging in high-tech front-running? The Rothschild template: invest in the fastest information pipeline, understand market psychology, and profit from temporary dislocations, is the unchanged core. We have not evolved beyond 1815. We have automated and accelerated its fundamental principles. The London pillar is now a server rack. The grim facial expression is a predictive sell order algorithm. The pursuit remains the same: to see the future a fraction before anyone else and to position capital accordingly. The danger of the pigeon myth is that it personalizes systemic power. It suggests world-changing wealth can be won in a single, clever trick by a lone genius. This is comforting fiction. The reality is more formidable. Financial power is networked, systemic, and redundant. The Rothschilds built a resilient, interconnected web of capital, information, and political access. A loss in one area was covered by gains in another. This systemic view is crucial for understanding modern finance. It's not about finding the one signal, but about building and maintaining an entire infrastructure, legal, technological, and relational, that consistently tilts the odds in your favor. The real lesson of 1815 is not about a trick, but about the architecture of advantage. Lasting power comes not from a secret, but from a system designed to generate and compound opportunities across time and geography. The myth focuses on the spark. The truth is in the enduring engine. How do we know any of this? The Rothschild family archives, now largely open to historians, provide the factual bedrock. They contain ledgers, correspondence, and broker notes. The pigeon story appears nowhere in these primary sources. It emerges decades later in sensationalist biographies and political cartoons. This is a masterclass in historical methodology, cross-referencing family financial records with government documents, newspaper reports from the time, and the diaries of other traders. It teaches us to be skeptical of simplistic, emotionally satisfying narratives about wealth and power. True economic history is found in balance sheets, shipping manifests, and bond yields, not in catchy fables. Discerning the truth requires following the money trail, not the myth trail. The archives reveal a story of meticulous calculation, not magical omniscience. They show the payments to couriers, the records of bond purchases and sales, and the letters discussing strategy, all painting a picture far more credible and impressive than the fable of the lone bird. In the end, the carrier pigeon myth itself has proven to be a remarkably durable financial instrument. It has generated immense cultural interest, countless books, articles, and documentaries. This very video, all extending the Rothschild brand and its aura of invincible cleverness. The myth has been a perpetual annuity of intrigue. This is perhaps the final, ironic lesson. Nathan Rothschild's greatest trade might not have been in consols, but in narrative. The world chose to believe in a magical pigeon and a singular, deceptive masterstroke, a story that has paid dividends in notoriety and mystique for 200 years. The truth of relentless work, systemic innovation, and the calculated manipulation of perception is both more ordinary and more extraordinary. It is the blueprint not for a lucky break, but for building an empire that outlives empires. The myth in its persistence continues to serve its original unintended purpose. It keeps the name Rothschild synonymous with peerless financial power, a testament to how narrative itself can become a form of capital compounding interest in the marketplace of ideas. The Rothschild signal was never a bird. It was the cold calculus of risk, the engineering of panic, and the slow construction of a financial machine unparalleled in history. The pigeon is a fable that obscures the real work of power, the building of systems over secrets. True financial history lives in ledgers, networks, and the understanding of human fear and greed. The battlefield was Waterloo, but the war is perpetual, the war for information and capital. To see how this pattern decided the fate of a modern nation, witness the Vanderbilt Gambit, how a railroad war forged American capitalism. Next on Blood Money Files. Subscribe now.